Whenever I'm in a car with other people, I prefer to be the one driving the car. A lot of that has to do with the fact that as a child, I used to get motion sickness really bad. And when I'm driving a car, that doesn't happen. But the bigger factor is I am a self-described control freak. I like to have control of those things that are going on around me. And as a financial advisor, we like to encourage our clients to have as much control as humanly possible. And this control changes depending upon your life situation. For a lot of people who are employed in your working years, you don't have a lot of control over the things that other people do. For example, taxes are one of those big things. When you have a paycheck coming in the door, you don't have a ton of control. But as a retiree, you have a lot more control over taxes. What do I mean by that? You can't control the government. You can't control what the state you live in does. You can't control the rules and the laws, but you can control your income. And we in the United States pay taxes on our income. When you're working, when you have that paycheck, you want that income. Your company's going to pay you that paycheck whether you like it or not. That's a good thing. But when you retire, you get to decide what your income sources are going to look like. And right now, we are in a very unique time. We are in a year of presidential transition, and we are in a year of a congressional change in leadership, change in a political party. And what happens, anytime you have one of those things, we have tax law changes. So now more than ever, taxes are going to be a very important factor when it comes towards your retirement plan. Everything's important when you talk about where your money's going to come from and where your money's going to sit and what kind of investments you're going to have and long-term care. All that fun stuff's important. But right now, taxes are very, very important. For a lot of people, for a lot of the clients that we see, they might see an increase in taxes. Now, might is the key word there, but you have to understand, maybe now is some of that time that you want to recognize income. Maybe it's later. There's three big tax areas that we look at. The first is we call income taxes. Again, that's taxes on your income. That's that tax return that you file. That could be from wages. It could come from rents and things along those lines. But most likely, if you're retired, that's going to come from 401k and IRA distributions. And how you time those out is going to be extremely, extremely important. The next big thing we want to look at, the big changes coming down the pipe, is going to be with capital gains changes. Now, the way that this law is being sold, or the way that this law is being communicated to the general public, is that these capital gains changes won't hit the average person. And we're going to talk about that in a future capital gains video. But this capital gains law will actually hit way more people than they're going to try and tell you that it does. And the last one is the estate tax. The estate tax is when somebody passes away, how that overall value of the estate can get taxed at a federal level. There's some changes coming down the pipe for that as well. Now, with anything that you have, we always say you want as much control as humanly possible, and you may have a very short window of time to exercise some of that control so it can be better for yourself, better for your family, and that you have as much of that control over your finances as opposed to what Uncle Sam wants, is he wants control as well. I hope you got some value out of the video you just watched. And if you know somebody else that might benefit from seeing this, please share it with them. And to see future videos that we produce and put out, please subscribe to our channel.